Welcome to Illuminati Silver, where we tell you the truth about silver. Today is Saturday, the 26th of January 2019, and we're providing our gold and silver weekly update for the week ending the 25th of January. Gold rose $22 last week from $1,281 to $1,303, having hit a high of $1,303 and a low of $1,277. In sterling terms, gold finished the week at £987. That's down £8. And in euros, it closed at 1,142 euros. That's up 14 euros on the week. Silver rose 40 cents from 15.35 to 15.75, having hit a high of 15.75 and a low of 15.19. In sterling terms, it closed at £11.93. That's up 1 pence. And in euros, it closed at 13.80 euros. That's up 0.29 euros. The gold to silver ratio fell from 83.5 to 1 to 82.7 to 1. The Dow Jones closed on Friday at 24,737, up 183 points on the day and up 31 points on the week. And the NASDAQ closed at 7,164, up 91 points on the day and up 7 points on the week. And the S&P 500 closed at 2,664, up 2 points on the day, but down 6 points on the week. Brent crude fell $1.06 from 62.70 to 61.64. And US light crude fell 11 cents from 53.80 to 53.69. The dollar index stands at 95.79. That's down 0.54 on the week. Gold markets initially opened rather subdued and oscillated slightly in the early part of the week. Then, from a technical point of view, 3 daily hammers were formed, and on Friday we witnessed a significant rise in the gold price, rising some $23 from $12.80 to $13.03 in pretty quick fashion. Now, $12.80 was reasonably supportive, and it is predicted by analysts that $13.25 would be highly resistive. But if this were to be surpassed, then we could indeed see a resistive but consequential move up or close to $1,400. The US dollar weakness has clearly had an effect. And what was surprising, of course, is that President Trump has agreed reopening government, albeit for a few weeks, which actually should have proven positive for the dollar. Against this, of course, it was suggested that China negotiations were not going as well as planned. But of course, at the moment, it's all smoke and mirrors. Silver markets opened lower, and like gold, oscillated until Friday, where it rose from a low of 15.32, rising to 15.75, closing at its day and week high. Interestingly, if silver were to hit $16, we again could see it rise to $16.50 relatively quickly. But once again, we have to bear in mind that $16 is highly resistive, and so the dollar would have to fall another 1 point on its index to push silver beyond $16. We have tended not to mention currency interrelationships, particularly in our weekly roundup, but we'll be doing so much more from February. Our guidance is to look at the euro-US dollar pair. As a rule of thumb, if the dollar falls against the euro, then gold and silver prices are likely to rise and vice versa. This is not set in stone, but it is almost as reliable as the dollar index, which we do mention each week. Much of the economic news last week were delayed due to the government shutdown, though the market manufacturing PMI for January, published on Thursday, was up just over a point compared to December, and services PMI were down just 0.2 compared to December. So let's see what's on the economic calendar of significance this coming week, and hope more of the data will be published, though we have to admit that it may take the government a week or so to get back into action properly. On Tuesday, we have Consumer Confidence Index for January. On Wednesday, GDP for Q4, plus the FOMC announcement on interest rates, with the betting being on no rate rise and a possible continuing dovish talk from Jerome Powell, the Fed chair. On Thursday, personal income, consumer spending and core inflation, all for December. And on Friday, non-farm payrolls, average earnings, ISM manufacturing index, and motor vehicle sales for January. So a heavy set of reporting next week, if the government can get all of the figures out. Of course, currency and stock markets will await Jerome Powell's press conference on Wednesday, and depending on what he says will certainly dictate dollar value and the likely direction of gold and silver prices short term. Last week, we anticipated a period of consolidation, which held out until Friday. Frankly, when it occurred, the rise that is, we had not had time to investigate closely enough the main reason for that dramatic rise. If it had been a dramatic fall, pumpers would have claimed government intervention or manipulation. However, a closer analysis overnight provided two main rationales. First, and most important, was a report issued at both CNBC and Wall Street Journal's websites, highlighting that the Fed were contemplating an end to its quantitative tightening program sooner than expected. That is, they would stop or reduce its balance sheet drawdown. This would have quite a significant impact on the value of the dollar, causing it to weaken against other currencies and therefore prove positive for gold. We should bear in mind that the Fed still has some $4 trillion of balance sheet debt to reverse. And any slowing down of this process or otherwise, we hope to obtain an indication from Jerome Powell's speech on Wednesday. So it's very important that we pay attention to what he says that day. Secondly, the issue of China's talks with the US has not been going quite as well as first reported or suspected. Now, this may be fake news, or more than likely what we call flack news, info sent out to confuse the readers or viewers in order to enhance the negotiation parties' positions. That said, we must be mindful that China has kept its total foreign currency reserves steady at just over $3 trillion for the past 2 years, buying a more diverse array of assets to replace the US government debt it sold. The uptick in its gold holdings announced earlier in the week was likely part of this shift. Similar, in fact, to Russia, which is why we published an article on this very subject within the Inner Sanctum earlier in the week. Finally, as we mentioned in our previous weekly reviews, we are entering the Chinese New Year, which traditionally is a positive time for gold and silver prices, so any rise should not be deemed to be a surprise. So what is likely to happen next week? Well, as for Monday, it genuinely could go either way. A slight dip cooling off from Friday's strong close, or continuation. What we do foresee, however, is either a strengthening or a consolidation of strength just prior to Powell's speech. And depending on what he says, then either a rise follow through or a disappointing fall. So next week is a crucial week for gold and silver prices in our view, and probably the most important for the year so far. We are indicating a strengthening of prices, at least from midweek, unless it occurs sooner. And to think, in the early part of last week, when prices were falling, we were being told by 1 or 2 subscribers that we had got it wrong and gold and silver were back on the way down. It's quite heartening and novel for us to be talking the price up short term when others expected it to fall. Finally, Inner Sanctum members will shortly receive their invitations to sign up to our webinar to be held next Saturday, the 2nd of February. And already we have over 25 articles by Dr. Richard North, which have been uploaded and available to read. Also, we ask you to look at your bulletin boards regularly, as there will be quite a few announcements made over the coming days. Next week's weekly roundup will be the last that will be available for free, unless you are an Inner Sanctum member or subscriber. However, as mentioned last week, it will be available for anyone at a cost of $3 for non-members. But next week will still be free for everyone. We shall be using some charts next week in order for you to have an insight into what future reports will look like, and for you to judge then whether it's worth either signing up or paying that $3. We have to add a big thank you to everyone who supports us, either as a paying or free member, and to say that there is so much going on, including a number of training videos into gold and silver collecting, interviews being lined up, plus a series of location visits, which will surprise many of you over the coming months. Meanwhile, we hope and wish each of you a most pleasant weekend. And a happy birthday to Greg, who is trying to claim he is 21 again, though being born in 1946 suggests that rampant deflation has occurred, leading to his current state of depression. Only kidding. Many happy returns, Greg.
We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.